in the crypto ecosystem, stuff just shows up.
Yeah.
Just airdrops happen, and you're like, I didn't want this, and so you kind of get this question. I didn't even know I got it. And now I have income I didn't know I had. Those are a little bit. I think, like I said, objectively, you can look at the tax law and say, hey, the tax law kind of says this is the outcome. Now, there's a different question about, like, yeah, is there maybe a policy discussion to be had about, is that the right answer? Should the law be augmented a little bit to accommodate some of this stuff?
This content is brought to you by Uphold, which is one of the top crypto platforms out there, which allows you to easily buy, sell, trade Bitcoin and the top altcoins in the market. Uphold lists 260 plus cryptocurrencies. They also allow you to trade precious metals such as gold, silver, palladium, and platinum. I've been a user of Uphold since 2018, so I can vouch for this platform. They have full transparency reports and they don't commingle or lend out your funds. They also have a great product called Vault, which is an assisted self-custody product. Vault allows you to maintain custody of your funds, and the keys are split. So Uphold holds one and you hold two. And if there's any issues, if you lose one of your keys, Uphold will help restore these keys and you can maintain access to your funds. It's 24/7 instant trading. It's trustless. So this is a great feature that can give you peace of mind where you don't have to worry about if you lose your private keys and much more. So if you'd like to learn more about Uphold, please visit the link in the description. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Miles Fuller, who's the Senior Director of Government Solutions at TaxBit. Miles, great to have you on.
Yeah, thanks for having me.
Miles, I've been a user of TaxBit for years when you guys were more consumer focused, so I'm very familiar with the product. And we're going to talk a bit about TaxBit and as well as what the IRS is doing with crypto. But tell us about yourself, your background. I know you spent some time at the IRS.
Yeah, sure. So my background, I came out of school. My background from educationally is finance economics. That's kind of where I started. But then I went to law school, came out of law school, landed a job as a lawyer for the IRS. So like two things people don't want to hear about: being a lawyer, working for the IRS. But I did that for 15 or 16 years. And IRS lawyers kind of come in two flavors. There's normally one that's the Washington, D.C. type, writes guidance, writes regulations, that stuff. And then there's the kind that's out in the field working with examiners and doing stuff and doing litigation for the IRS. I was the latter. I was in the field doing stuff. But through that job is where I used to tackle a lot of abusive tax stuff.
Mm.
And I got to know a lot of people. But through that is where I kind of came first in contact with crypto, although it wasn't through tax. It was more of doing investigations that the IRS does relating to anti-money laundering, that kind of stuff.
Mm.
Through that, I had someone I know that reached out and they were like, hey, we got this thing we're doing. And it involves this thing called Bitcoin. Do you know anything about that? And I'm always happy for a challenge. So I was like, I'm not sure. I know a little bit, but let me get in. And that was like 7 or 8 years ago. And now here we are.
Wow. And was your first entry into the crypto industry via TaxBit?
Yes. So officially, through the IRS side, but to the actual industry side was through TaxBit. I was at the IRS and I came over. You may know the history there. Obviously, TaxBit does calculation related stuff. You sound like you're a customer of that service we had for years. The IRS sort of had the same problem, right? They were doing investigations. They started doing examinations of people that had it, and they needed assistance doing those calculations. They sought out a couple vendors that they could test run, and they ultimately awarded a contract to TaxBit. Through that contract, I got to know the folks at TaxBit very well, and I liked what they were doing, and I liked their approach to the ecosystem and trying to grow the ecosystem in a positive way. And became friends with them and opted to jump ship and help them kind of grow their company.
So Miles, I hope you don't mind me asking, what was like the most egregious thing you saw at the IRS as it relates to crypto? Was it just people not trying to pay their capital gains, or they're, trying to put it into stable coins and not report it? What was the most egregious thing you saw?
Yeah, I think it was probably like the first thing. It's weird because this is where, people in the crypto space get I say kind of a bad rap. There's definitely people in the crypto space that are doing bad things, but there's people in all financial spaces doing bad things.
Of course. Yeah.
So, but in the crypto space, yeah, I think early on there would be some people who just weren't paying taxes. And it's hard because you would talk to people and you really try to figure out when you talk to them, like, okay, you're not paying because you know you're supposed to be paying and you're not paying, or are you just not paying because you legitimately are confused about like, okay, what's the rules here, or I can't get the data together to like do it accurately. But yeah, we did see some I came across a few very high dollar ones where it's like, okay, you made a lot of money.
Mhm.
You probably knew you needed to report something. But yeah, it's interesting because but I think there's a lot of forgiveness there because there are people who are trying to do it right and they're like, hey, I'm trying to do this, but I don't have all the right data and I can't get it to work out correctly. So just kind of bear with me here. And my experience was the IRS a lot of times was somewhat forgiving. Like people are trying to do it right. The IRS understood the problems with data, the problems that still sort of exist today.
Right.
And so they would sort of try to work with people and talk through. And as long as everyone was on the same stage of like, look, we're trying to get to the right answer. We're trying to pay our taxes accurately. Let's just figure it out. And that was a good approach.
Well, it's that's good to hear that the IRS was forgiving because this was all new for everybody, whether you're in government or you're just a retail investor or institution. And that's where I guess TaxBit comes in, which is trying to help make that simpler. If you can give us an overview of TaxBit and the services.
Yeah, for sure. So as you mentioned, if you were a customer for a long time, TaxBit started off like 6 years or so now. The main focus was helping individual taxpayers just be able to crunch their numbers, get them on a tax return with respect to crypto, whether that was centralized exchanges or on-change activity. We recently exited that space to sort of move the company a little bit away from that. And we've refocused the company. And this actually was, I think, the original founders of our company. It was one of their ideas at the beginning was not always to be in that retail investor space,
Mm.
but knowing that, hey, look, like this doesn't make sense. Why is crypto the only asset where you don't get some sort of at the end of the year, you don't get something from the service you're using that kind of tells you this is what you need to put on your tax return? I mean, it's what you get in TradFi. You'll get your statements at the end of the year that says, hey, just put this information on your tax return. So
Mm.
they saw that years ago and reached out and wanted to start working with exchanges and stuff to enable that type of reporting for customers as like a customer service element. And they've been doing that for a long time. And then ultimately the government kind of caught up. And now there's rules that are supposed to be coming into place the next year or two for that precisely thing. And so TaxBit has really refocused its effort on enabling that type of reporting to make sure people are able to do their taxes correctly. Now, in addition to that tax side stuff, TaxBit also does financial accounting services. So if you're a company that has crypto on your balance sheet, you need to report either internally or externally, we enable that type of reporting. And then finally, the place, like based on my title where I sit, is on the government side. And so, like I said, TaxBit has this stuff where our software helps enable the government to be able to do these calculations when they're doing examinations and stuff. And that's sort of the part of the company I oversee. So those are our main three areas today. We've kind of moved out of the consumer space a little bit.
Mm. And what do you guys have planned for this year? Are there any special initiatives or is just, continue to grow the business?
I think it's just continuing to grow the business and it's trying to just keep engaging customers and getting customers ready on the enterprise side. There's a lot of brokers. There's these regulations that are, I'm going to say, in flux. There's proposed regulations, but they haven't been finalized yet. And the goal is just trying to keep in communication with our customers there on like, okay, here's what's coming, keep them updated to help them build to be ready to implement those regulations when they go into effect. And then on the government side, yeah, it's just trying to we're actually expanding into the European area. We just recently hired a head of operations over in Europe. So we're working with some European governments and European exchanges to expand over in that part of the world as well.
Mm. Now, you mentioned some proposed regulations and rules around taxes for crypto. There was some crypto tax reporting requirements proposed by the Treasury last year. Can you tell us about that? What are the details there, and when do you think that might go into effect?
Okay, so yeah, the details there. So those the proposed regulations that came out last fall actually were the result of a law that Congress passed all the way back in 2021. And that law was passed, and the concept of that law is really to make the crypto space a little more analogous from a what we would call in the tax space tax information reporting. The way I describe that to people is like, oh, think about, hey, you get a W-2 from your employer that says, hey, this is what you got as a salary. Or if you do traditional investments, you might Merrill Lynch or Charles Schwab at the end of the year gives you that 1099 document that says, hey, this is the stocks you bought and sold. So it's that's tax information reporting. It helps the taxpayer get information, know what to put on their tax return so it can be accurate. And then it helps the IRS see the same information so they can say like, hey, this just like check the box. Like they did this right. It's good. We don't have to bother people. So that's what Congress was after. The problem is crypto is a little bit different. Like there's different data elements there, and the functionality in crypto is different, right? It's easy to bounce units of an asset around from exchange one to exchange two to a personal like on-chain wallet. So you have this slightly different stuff, and that's why Treasury I think took a little bit of time to get those proposed regulations out. They were trying to get their head around about like, okay, how's this really going to work?
Mm.
So those are out. The proposed regs indicate that they would go into effect for the 2025 tax year. So it means at the end of 2025, early 2026 is when you would get those those information returns relating to 2025. So you'd be able to get your 2025 taxes more accurate than what you may be doing today. But they haven't been finalized yet. So everyone's waiting for them to be finalized with what the rules are going to be. And so that's kind of what's on the horizon. Now, that's going to let people know, like, hey, if I bought Bitcoin at a certain price and resold it at a different price, this is my gain or loss. That's the kind of information they're looking for, as well as if you move something, there's some stuff that's not covered by the regs today, but conceptually it would be like, oh, if Miles had something on an exchange. So the way they're doing this is what they're calling brokers. We think for us, most of the reality is most of that's going to be like your Coinbases, your Krakens, your Geminis, sort of centralized exchanges. But the other concept there is if I have something there and I move it to my personal wallet, I'm gonna get some information about like, hey, what was the cost basis of that? So I know, and so the IRS knows. So then if I sell it from my personal wallet, maybe you and I meet up at Starbucks and we do a peer-to-peer exchange or something.
Yeah.
We have the right information that we can report accurately, and the IRS can say, okay, we don't have to bother those people. That's kind of what they're after. But it's 2025 is the first year, and then there's some additional reporting. They're getting like a little more granular level reporting that'll go into effect in 2026. So you get that in 2027. So they're kind of phasing it in a little bit.
So do you think they're going to retroactively go after people who maybe didn't miss some of these steps? Like you said, like you and I met up at or maybe, there's something called local Bitcoins, right? Or
Yep.
local Bitcoin, and, we exchange. Do you think the IRS is going to go after, years of misreporting?
I don't know. Generally, so when you think about like from an IRS examination standpoint, generally, if you file your tax return, the IRS actually only has 3 years to go back. That's like sort of the standard rule. Now there are some exceptions to that rule. There's always exceptions to every rule. But generally that's it. And in this space, I don't, it's hard to see what get your head around what the IRS is going to do. I think when they go into effect, they're going to have a lot on their plate anyway.
Sure.
So they're not going to make, my prediction would be they're not going to make like some sort of targeted effort, but as they stumble into people, I tend to think like if they stumble into someone in sort of in more current years, and the IRS, keep in mind, the IRS always audits people in arrears, right? It's like this is 2024. They're probably doing audits of people right now, 2021 or something. That's because they're not as fast as what you might think they are.
Sure.
But in those situations, they might be doing an audit, say of like, hey, we're doing an audit of someone and it seems like they didn't report, and then they might say, okay, well, you're not reporting this year. Then we'll start going back. We'll go back and to see if you didn't report in prior years. But again, they're still oftentimes blocked by this what we call like a statute of limitation. They can only go back so far. But I also think there's going to be some shift. Like I think the IRS has an understanding that this information reporting coming online is going to have an impact where people who might have been using tools like our TaxBit consumer tool that we have that you're familiar with, or some of the other ones out there may be some discrepancies about what those tools were doing versus what this information is showing now. And so they're cognizant of that, I think. And that's going to help, there'll be some smoothing out, I might call it, a little bit of grace given. We're like, okay, everyone's getting in line. There's going to be this shift into this new reporting regime.
I don't know if you can share any thoughts on this, but I know one of the complications within crypto is, for example, like free airdrops and how that is counted towards income, even though, let's say, you don't cash it out. What are your thoughts on that and how the IRS may treat that?
Yeah, so the current rule, the IRS actually put out guidance on this some years ago that it essentially said that if you get an airdrop of some sort, that's I'm going to just describe it as a gratuitous receipt of property. And from a pure tax standpoint, the gratuitous receipt of property is income. Like if I showed up, it seems a little silly at a low level, but it's like if I showed up and dropped on your lap, a 12 pack of beer, that's, you got income. Now, no one cares about the value of a 12 pack of beer. Like no one's really worried about that. And maybe it's a gift, which then has its own rule that would say like, hey, it's exempted from being taxable. But that's the IRS's approach just from a pure like objective legal analysis. They say, hey, look, you got something. if it had value. And so this is where I try to break this conversation down though with people into kind of two parts. The first step is, hey, you got something gratuitously given to you, and it wasn't necessarily a gift. Like the reason you're getting airdrops is it's like a marketing thing, right? They're giving you the airdrop because they want you to get on the network. They want you to use the token. It's not a gift. It's really kind of done for a business intent. So at that moment, you're like, okay, you got something. It is income under the tax code. The second question, though, is what's the value of that income? What's the value of that airdrop? Now, there's a lot, like we hear about scam coins and other stuff going on. Like there's a lot of stuff you get, the value is zero. So you can say, hey, I got income, I got this thing that's income under the tax code, but it was income of zero, like it was worth nothing. Now you do have stuff though, in what you hear, maybe what you're talking about, you get a lot of people in my mind that are like, well, yeah, but I got this thing. It was worth $100 at the moment I got it.
Right.
So the IRS is saying I got to take it into income. I got $100, or maybe I have lots of units and maybe it's $1,000, whatever it is. But then like a week later, it was worth zero.
Right.
So now I like have this thing and then it's worth zero. And that's a tough, like, I think the IRS appreciates that. But me, this is where I told you, like, my background's like economics or whatever. Like, well, but if when you got it and it was worth $100 or $1,000, if you pulled the trigger and liquidated it or sold it, you would have had the $1,000. Like, you kind of get this question, people like, you didn't sell it because you were holding it as an, like, you wanted it to go up in value. You maybe didn't, you do it. So that's, like there's a rub there, and it's hard because it's a novel thing, because and unlike other situations where you might get free, usually, I think one thing people bring up is usually when I get some sort of free thing, it's because I like put my name into a raffle or I took some steps to get it. In the crypto ecosystem, stuff just shows up. Just airdrops happen, and you're like, I didn't want this, and so you kind of get this question. I didn't even know I got it. And now I have income I didn't know I had. Those are a little bit. I think, like I said, objectively, you can look at the tax law and say, hey, the tax law kind of says this is the outcome. Now, there's a different question about, like, yeah, is there maybe a policy discussion to be had about, is that the right answer? Should the law be augmented a little bit to accommodate some of this stuff? And that's kind of a different question that policymakers should have, or people should, talk to, write your congressman kind of thing and say, hey, I don't know that this is really fair. But yeah, that ends up being what it is. But the reality is, yeah, if you got it, it's worth a lot of money. Like you could sell it right away. That I always advise people, like, hey, if you're not sure about it and you get it and it's worth money, you have to take an income, like sell it, get the cash.
Yeah, I absolutely agree. Because I've gotten free airdrops and I'm like, what the hell? I didn't participate in this, but just because I held a token of a native chain, they automatically airdropped it. I'm like, okay, whatever. But is it that the IRS, maybe the balance of this is a certain threshold? If you get X amount of tokens valued at X amount, kind of like the $600 rule, right? You got to report.
Yeah.
Then it becomes a taxable event. But maybe if you got $40 of something, like, do I really need to be taxed for that or report it to the IRS?
Yeah. And so what you're looking at is like a diminishment rule. Now, you mentioned the $600 thing. The $600, it's like weird because that becomes the cross section of two elements of the tax world. So there's tax, like what you and I as taxpayers, we file our Form 1040 with the federal government. We put everything on. Conceptually, we file our Form 1040. We're supposed to put everything on it without limitation. The information return stuff we were discussing is where, well, if it's less than $600, the person that paid it from me is excused from like giving me that information return because it's like a pain in the butt to do it. So that, like, the discrepancy. But you do raise a very good point about, for people like you and I, like as individual taxpayers, is there kind of this, back to my example with you about like, hey, if I gave you a 12 pack of beer, would you really be putting the 12 pack of beer value on your tax return? Probably not. So I think there is a reality there that if as an individual, and I'd never, yes, you're supposed to be compliant or wherever, but I also think there's a reality that, like, hey, if you during the year got some airdrops and they were worth like 40, 50, $60 and you failed to put them on the tax return, the IRS is probably not, they're not chasing you down. Like that's not worth their effort. That they would go through, and because it's what's the tax on the 40 or $50. They're interested in some of these, larger ones that you hear people, oh, we did an airdrop, I got all these units, it was like $2,000, $3,000, $4,000 worth. That's what they're looking for. And the other thing, though, to keep in mind, we have this conversation about if you take it into income, then that value that you took into income and pay tax on then does establish your cost basis in those units. So later, if you do sell them and they went up in value, you're only paying tax on the difference between the income and the higher value. Or if they go down in value, you actually, you're going to deduct like a capital loss. You're going to say, hey, I took an income, but I lost money now on them. So that's something that people also, I think, sometimes forget about. Is like, no, when you pay the income, you get established like value in those coins. So then you can take advantage of that for tax purposes, because the IRS isn't trying to double tax you. They are just trying to capture tax at the moment in time it happens.
Mhm. Yeah, I mean, look, I don't envy what the IRS has to do here. It's complicated, man. There's so many layers, and just a brave new world with all these different ways to move into different currencies and digital current assets of value and so forth. And then the other aspect I think some people are still trying to figure out is, okay, if I cash out, let's say I sell some Bitcoin, but I put it in stable coins versus fiat, I still have to report that. But I don't know, how does that all work? Right? Because what if the stable coin goes down or it gets depegged? Like there's so many layers to this.
Yeah, and I think actually you touched on a very good point that I think is easy to tackle at think of it at a more like general level. And so what happened? People come out and say, "Oh, well, the IRS, classified crypto as property," and that's like true, but I think that kind of misses the point a little bit. Really, what the IRS said is like, "Hey, look, in the tax code, there's rules that deal with certain things. So the cash in your pocket, it's actually property, right? It's just a piece of paper. It's got some value because the government says it has value. So that's like fiat. But cash is a special type of property under the tax code that has special treatments. And then you have stocks like securities. They're also a special type of property that has a special treatment under the tax code. Same with commodities. So all the IRS did was come out and say like, hey, all of these things are property. Crypto is also property. It just isn't one of these other properties, at least not yet. Maybe someday, right? Like maybe things will change a little bit. But that's where the starting point is for this question you have is like, okay, it's property. So I have this Bitcoin, it's property. I'm going to sell it or trade it perhaps from units of Bitcoin into a stable coin. And then you're like, okay, now I got stablecoin. Well, stablecoin isn't technically cash. So
Right.
it's still this property thing. So now if I'm selling, like I bought the stablecoin for $1,000, I got 1,000 units of some Tether or USDC or something. And then I'm holding that forever. And then I sell it and it's still $1,000. But now you're telling me I got to like put all this on my tax return, but I didn't make any money on the thing. And that's like a very interesting question. So for me, I've seen both sides of that because I've seen people with the exact like $1,000 are like, why do I have to put all this on my tax return? Like I didn't make any money on it. And it's hard because there is, I would describe as what I call like a misalignment. Like if you don't really have any gain or loss, maybe there is a way to say like, hey, if it's this low level of gain or loss, like you don't actually have to put it on the tax return. The trade-off is I've been in the space long enough and done enough cases, including people like doing tax returns and stuff, or helping the IRS on the IRS side. There are people that'll arbitrage trade, stable coins. So like you mentioned, they come off the peg. And you get arbitrage traders who, even though they got their $1,000 USDC, but maybe they're doing all these transactions back and forth, but they're actually making money. And so the IRS is like, well, you're making money. You need to be reporting it then. So that's where you hit like a little bit of a rub that creates like an uncertainty about stuff. And this is something that's coming up. One of the big questions in these regulations we talked about was whether or not all these brokers are going to have to report about the stablecoin like sales, because that's just voluminous, people that might be doing stuff that has very minimal tax impact because, hey, they bought them at 1,000, they sold them at 1,000. Why am I reporting about all that? Just creating paper, so to speak. And that's something that I think the Treasury Department got a lot of feedback from people about that. And maybe that's an area where I think maybe the Treasury Department's trying to reconsider, like, oh, okay, maybe there will be some sort of de minimis thing, like, hey, if the gain on some transaction is super de minimis, you actually don't have to report it on the information return stuff. So that could be in the works because you raised a very good point there. It's a lot. And the last part I'll add to that is people do say like, well, why aren't stable coins are like currencies? Why aren't they just treated like currency? The difficulty we have, at least here in the United States, is there is a federal statute that defines like the legal tender of the United States, is the coinage in the dollar notes. It's under Title 31. It says it's these things. And only until that law could change would you ever be able to include other like crypto related stuff in there. So, somehow Congress changed that law. I don't know if it would change, but that's where people get hung up. They're like, well, no, these just function like currency. And it's like, yeah, but there's a law that says like currency in the United States is this stuff specifically.
Yeah, I mean, and to your point, a lot of these things are still up in the air. Congress is trying to figure out. There's a couple bills in the House. Yesterday, there was a hearing with the Senate Banking Committee and the Treasury. Crypto was brought up. Folks like Elizabeth Warren want to have AML on nodes and
Yeah.
validators. And then, the reporting requirements. I remember going back to the infrastructure bill. So there's a lot of back and forth, a lot of battling here. So hopefully, man, we can get some of these things clarified because it's a bit messy right now.
Yeah, I think 100%. I think the first place, and there's been a bill floating around for years, a broader, sort of regulatory bill, so less tax specific, but more just big picture. And it's maybe setting up some frameworks for a couple different things. One is you hear a lot in the news lately, sort of the debate that was just a few weeks out, there's this litigation between the SEC and Coinbase, and the court ruled on a motion that Coinbase had filed. And so first thing is like in Congress is maybe like, hey, maybe we need some broader regulatory framework that's helping decide like when is a cryptocurrency or crypto asset like fit in the securities bucket or the commodities bucket or whatever. And then, and then even then, but in that same vein, there's also this thing like stable coins. What bucket do they fit in? Because that's more, if you really think they operate more like a currency, that really puts it more under like banking, whatever, comptroller currency kind of stuff and how those rule works and what are the rules. Because I get nervous. We talk to people about stablecoins, and you hear about, okay, there's asset-backed stablecoins. So that's like your USDC and your Tether and stuff that are like pegged one to one, but there's actually like dollars or assets behind them.
Mm.
The other side in the ecosystem, we talk about stablecoins, and you think of like Luna, like Terra Luna, where it's like an algorithmic stablecoin, which isn't backed by anything. And so that's where you do get a little bit of like the Elizabeth Warren types, that consumer protection, right? You want people buying these things thinking, oh, this is just a stable coin. It's cool. I'm going to get my money out and then have it. There's like nothing behind it. So some clarity for that, which is really focused on like a consumer investor protection kind of thing, would be helpful as well. So people know what they're getting into.
Yeah, we absolutely need that balance where protecting consumers, but also not stifling the innovation. And I know there's people on both sides of the spectrum here, but it's the balance regulations, a meeting in the middle of the roads. Hopefully, they can get that ironed out soon. Um, do you think the IRS will integrate, I don't know, AI or blockchain? This is a tough question. And maybe to help them manage all these things and to keep up with it and to, enter this new tech revolution that's happening.
Yeah, it's difficult. I think the first step of those types of technologies, I think the IRS would move probably first into maybe like the AI realm before they went into pure like distributed ledger technology to do stuff. There could be a way from a tax accounting, like you and I, every year we file taxes. We actually have the IRS runs some huge database that tracks like every year, like, what's my tax? What did I pay? How much money did they give me back? Or how much money do I have to pay at the end of the year? Like think like an accounting ledger. They maintain that for every taxpayer out there. So there's a way we think about distributed ledger technology. Maybe there would be a way that they could take it and move it there, make it, you get worried about privacy rights, though. Tax information is a very protected thing here in the United States. But maybe you have some way of making it not visible, but you or I could go look at our own information very easily, much easier than what we do today. That could be one option. I think that's kind of far off. I think the first step the IRS would take would be moving more into the AI stuff to really try to automate some of their processes. One of the things the IRS struggle with is, I think all governments, they have very limited resources. People don't, they always have more work than what they could get through. So they're probably always looking ways to be more efficient in how they do stuff. And one of the areas that they struggle with is like they want to, if someone's not paying their taxes, they want to identify who are those people and those people you want to go out. You don't want to identify and do an audit of someone who actually paid all their taxes. Like A, that's annoying to that person. And then B, that's a waste of IRS resources. So I think that's where the IRS maybe is looking at from an analytics side, like how could AI and machine learning be used to make better decisions about stuff. And so I could see that step coming first.
It's fascinating as you're saying that. I was thinking about the other conversations I've had with digital identity on the blockchain and CBDCs and digital identity, tying into your driver's license, your voting, and all
Mhm.
that, which is not a bad thing. But people are worried, like, there might be a dystopian future with CBDCs, and but it would make sense if all of this is running on the blockchain where you don't have to jump through all these hoops, but it's easily accessible. I can go view my tax information straight from the IRS because I have my digital identity. I can easily verify it. But also, if I'm spending that digital dollar CBDC, they can easily track everything I'm doing,
Yeah.
and the right to privacy is what people are concerned about.
Yeah, and like you mentioned earlier, it becomes like a balancing act at the policymaker level of like what level of like technology related efficiencies do we want to achieve or to how to simplify things, but then how do we what's the trade-off between that and things like privacy rights? Like this becomes a very like a big question. And I do think digital identity stuff could be happening. CBDCs are an interesting thing in my mind, and people have different views, but at some level on CBDCs there's this idea I in my head, and this is the economist kind of part of me coming out. It's like, well, if that ever happened from government, like it probably would look very different than how we see the Bitcoin network or something. It would be this idea like Bitcoin network being sort of totally open source. Anybody can hop on the network and run a node to validate transactions, proof of work. To compete to do it. Like, if they did CBDCs, I don't know if someone wants to put their entire financial legal tender system out where you could have foreign governments or whatever trying to run nodes and disrupt transactions. So I think the structure of that type of distributed ledger would look totally different
Mm.
than what, as we understand currently, like how most distributed ledgers or blockchains run. But it could be there. But then with that, there is the visibility of the ledger, which is the question you raised. It's like, we really want the IRS going to look at they can't see all my cash stuff. This morning, I'm in New York. I went down the street, bought a bagel, coffee. Like no one knows like I just paid them. They have their cash register. They have it, but no one's tracking my cash that I just pulled out of my pocket and paid the person. That's a weird thing to think like someone's could be monitoring what I'm doing. That raises some interesting questions.
Yeah, obviously a big debate happening. There's political candidates, there's members of Congress who put out bills, trying to block the Fed from doing certain things, but it's TBD, right? To see how they're going to roll out these things and if it's going to align to the Constitution and our right to privacy. So we'll have to wait and see. But at least we have alternatives and Bitcoin
Yeah.
and these other cryptocurrencies. Um, Speaking of Bitcoin, I would love to get your thoughts on the Bitcoin Spot ETF launch. That was certainly a landmark moment for the crypto industry, even though we had to beat the SEC in court for this. But nevertheless, all of Wall Street is here. What are your thoughts on that?
No, I think it's huge, and it's going to be a mass push because I do think somewhere from an investment standpoint, there's sort of a subset of people that have been tinkering with buying and engaging in the crypto ecosystem. The sort of reaching that point where now we have an ETF that's available to really everyday investors. That you could go to your Merrill Lynch or Charles Schwab and be able to buy into these ETFs. That's going to be huge for adoption, and also I think huge then for acceptance and people seeing like, okay, hey, what is this thing? Let me get more engaged. So it's super interesting. People ask questions like, oh, what's the tax impact of that? And I'm like, well, at that point, you're buying an ETF. You're not buying Bitcoin.
Right.
So you're really looking at the tax treatment of ETF as an investment vehicle, which could come in a couple different flavors. And I think even right now, it's not totally clear how they're going to do that reporting. There's two kind of buckets in ETFs, but you're getting closer. You're getting it out there, and you're making it more easily or readily available to the public at large. They don't have to go to Coinbase now or Gemini even, or they don't have to get some like a MetaMask wallet and start doing swaps. They can just basically go right to their local broker that they've used where they got retirement accounts at or something and be able to get access to investing in Bitcoin. So that's a huge step, I think.
Mm, for sure. Miles, I'm going to ask you a weird question here because it's something my own personal feelings, but you may feel different because as someone who worked at the IRS, I feel like capital gains taxes are just wrong. It's highway robbery by the government because I take my already tax dollars and I invest it, I make a gain, and the government comes and takes 20, 30%, depending on your income bracket. Well, you think there's ever a chance that capital gains goes away or gets reduced?
I would. I don't know that there's ever a chance. Yeah, my speculation is probably not a chance it's ever going to go away. I will say this: keep in mind, like you do capital gains tax, the goal there is that the IRS is taking not like, and this is back to this question of double taxation. It's like you've taken your $100 you've made, you pay tax on your hard-earned money. and then you take it and you invest it in something. Well, and then later when you exit out of your investment, that's the moment that triggers capital gain, right? You got to exit or dispose of your investment. You're only paying tax on the delta, right? You're only paying tax. Like if you started with 100 and now it's worth 200, you're only, or maybe that's a bad example, like 100 and now it's worth 150, but you're only paying tax on that extra 50. You aren't paying tax on the 100 again. So that's something to keep in mind. What's interesting is capital gain tax as we understand it today, which is sort of bifurcated in a way, right? If you have your investment, if you're engaged in that investment in less than a year, the income you make from that investment, that gain that we talk about, is actually subjected to your ordinary tax rate, same tax rate your salary or whatever wages might be taxed at. However, if you hold that investment for over a year, it's going to be taxed at what we call preferential rates. So it's taxed at the lower, like the 15% rate. There's some other things that go in there, that go a little bit up because there's some other surcharge kind of taxes that come in, but just generally people think about it. So what's interesting historically is that 15% rate hasn't been around for as long, like it's probably only been, I'm trying to remember the date. I think it's like the late 90s. Like that preferential rate came into play not super long ago. And it was an idea to like push people into investing to give them that tax break. And where you're going is like, is there a way to get that tax rate even bigger? Like, how do we get it even lower? Which actually isn't a bad idea. I think it's weird because you hear a lot of news, and that's a bigger tax policy question, right? Like, what sort of behavior do we want to incentivize by our population? Do we want them to like invest stuff? And the way we get them to invest is maybe reducing taxes. The flip side is there's people that say, hey, lower income or marginalized people, they don't have the extra money to be investing. Only sort of certain demographics have the money to be investing. And if you're giving those certain demographics a tax break, then you're creating this like discrepancy or inequality in our tax system. And that's like a different policy question that comes up. So this is interesting. On this point, I think it'd be curious as we go into next year. If you might remember back in 2018, when we had Donald Trump as the president, there was a series of tax cuts that got put into place. Although he was the president, it was really Congress puts those in place. Those are all set to expire in 2025. Oh, wow. And so there's going to be a big debate in the tax, like in Congress next year around tax policy, because they're all supposed to expire. Certainly some of them people don't want to expire. Other ones people maybe do want to expire. So it'd be very curious in the tax world to see what happens and what comes out of Congress.
Yeah. And I remember hearing things about wanting to tax unrealized gains as well. I remember hearing it in passing. So I don't know. Is there anything new with that, or is that off the table?
I wouldn't say it's like off the table. I don't think there's anything new. There is some talking points around, and this goes to kind of what I was talking about, this idea that you have people who have stuff invested, and the normal tax rule is like, hey, if I invest in something and it's going up in value, I don't owe any tax on it until I exit that investment. Right. Like it can just sit there, and that's this concept of unrealized gains. I think, yeah, what happens is from a policy debate, there's certain people in Congress that I think that's more probably on your Elizabeth Warren side and that kind of stuff. I think that's I say certain people not because I'm trying to be coy. I'm just trying to remember who are all the ones talking about it. I think it's like Elizabeth Warren side. Yeah, they have as a tax policy matter, they view it as like, hey, we can increase revenues to the government if we just start taxing these people every year. And I would say that's a foundational shift in what tax policy in this country has been. Whether it'll happen or not, I don't know, but that's not how it's always worked here. To then you're getting, and their goal is to say, well, yeah, but you have these people with stuff invested and it's just going up and they don't cash out. So they're avoiding tax, but it's like, but they haven't cashed out either. They don't really have the money. It's just paper money or it's on paper. They have these gains. So that's a tough question, but it would, as a historical matter of tax policy, be like a huge shift in how the United States approaches taxation.
Yeah, I hope that doesn't happen. But I guess it goes back to, the larger government problem of overspending, right? The government can't balance its own books. They spend too much, and then they have to, where do they get the revenue from? Well, we got to raise taxes. And this is not just a US problem, but maybe it goes back to the whole fiat debt-based system, and which is a larger conversation. So I don't know if you have any thoughts on that.
No, I mean, it's what you're getting at is things that I don't think there's ultimately clear answers to, right? You have different people have different viewpoints. My background in economics stuff, you'd have these bigger, like fundamental questions you discuss around tax policy, like what is it? But there is the idea of, from a finance standpoint, it is very simple. The government has expenses it has to incur. And we can, people can have a debate all day long about what those should be.
Hmm.
But then, and then in order to pay those expenses, they have to generate funding to pay those, whether that's through taxation, through borrowing, or something. And these are really deep questions people can have. You could debate all day. We could sit all night, having some drinks and talking about them. And there's not, I don't know, at the end of the day, there's probably some answers that are in some ways better than not, but they're often trade-offs. And so you got to sit around and figure that out. And I don't have any good answers for what the outcome will be. I have faith that at some point we will figure it out,
Right.
and it's going to kind of keep going forward and things will be okay. But yeah, it's super, super interesting questions.
For sure. Maybe crypto and blockchain will offer a solution as you know, there's future iterations around it. And look, they're going to tokenize the money anyway, so maybe there's a solution there. Who knows?
Yeah, who knows where? Yeah, and I do think as blockchain technology, even at a fund level, comes in to change how we do things, maybe change how financial transactions occur, how they're structured, how they're settled. There could be opportunities there to have some changes in how the system operates.
Mm. All right, Miles, I got some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
Oh, I don't know. That's a tricky one. It might be like outdoor ecosystem. I'm like a big like I live in Colorado. I like the outdoors, so it'd kind of be that. It'd be kind of like outdoor oriented.
Nice. Rapid fire questions. Favorite food?
I grew up in Southern California, so I'm gonna go with Mexican food, particularly Baja California style Mexican
Uh,
food.
I've yet to try that, but on my list. Favorite musician or band?
For me, there's a lot. It could be anybody at any given time, but the one that always comes back that's old school. I had two older brothers, Pink Floyd. So my oldest brother, I remember when I was a kid, he was a huge Pink Floyd fan. So I always go back to Pink Floyd. It's one of those old school English rock bands.
For sure. Favorite movie?
I would say Shawshank Redemption.
Good one. Favorite book?
It, Ivanhoe, Sir Walter Scott's like a classic. Robin Hood kind of tale in there. So that's one of my favorites.
Nice. And when you're not working at TaxBit, what are you doing for fun?
Often mountain bike riding, being outside in general, stand up paddleboard, that kind of stuff.
Miles, pleasure chatting with you. I appreciate all the insights and knowledge, and I definitely have to have you back on because this tax thing is only going to continue to get crazier as the government tries to figure out all of this. But thank you so much for joining me.
Yeah, no, thank you for having me very much. I super appreciate it.